Good morning, ladies and gentlemen. Give me one moment. Sippy coffee. Shipping on my coffee. Ahoy! Ahoy, ladies and gentlemen. Alrighty. Let me make sure my cammy's all... Oh, no. No. Yes. There we go. Fix that corner. Beautiful. What's up? Danny, Dennis, Jalen, Phenom, Peter, Keto, Samsung, Mike. What's up, everybody? What's up, everybody on Twitch? Only got a couple people out there on Twitch. And then, of course, X. The people out there on X. They gotta work on the live platform for X. They have chat, but it's like almost impossible to see it. You know, to make things more engaging, it'd be cooler to have that going. All right, well, let's take a look at the markets. So, first and foremost, test 1 2 1 2. Make sure everyone can hear me all well. I'm looking at market net flow right now. And market net flow has been bearish. Hey, what's up, Ken? What's up, Ken? Market net flow has been bearish for the bulk of the trading session today. So this right here, right out of the gate, okay? If you saw my quick little Instagram video, TikTok video, and I posted on YouTube too. It was a YouTube short where I took a short in the market today. So I don't rarely do. I'll short the market. I rarely do it unless the things are just like very clear, right? So we had a market that's been going basically vertical. Then all of a sudden today we get bearish market net flow, right? The red line's above the green line, red line's above the zero line, green line's down. You have convergence, momentum. It's all red. So in the early morning today, this is the opening range, right? This only 1 minute. I'm only looking at a minute right here, opening range. You can look at 5 minutes, 15 minutes, 30 minutes. It don't matter. Whatever best suits you and your risk tolerance. But basically, the market came up a little bit today, and then it started doodling around here. And I was like, okay, market net flow is pretty bearish. I'm sure people think that this is going to be bought at some point there. But if you were looking at market net flow or had that, you know, in your back pocket, you'd realize like, yeah, there's also a probability that we break down from here. So that's what I did. I traded it to the downside. I came down, it came up a little bit, flushed back down, and then right here is where I decided to get out. So you can see there was a series of lower highs, and then we had this kind of, it's not the bottom by any means, and I probably could have stayed in longer, right? I could have stayed in longer, and I still could stay in longer to the short side, and I'll explain that too. But once again, I don't like shorting. It's just not. I'm not a great shorter. But I got out right there on that candle. Why? Because we had a flush, we bounced, we pulled back in, and then we started breaking that high. And I was like, the market might, on this, kind of exaggerated move to the downside, we might base out. And I don't feel like getting stuck in a position. So I got out. Where are we now? We're lower than where I got out. So technically, market net flow is still suggesting that there could be some more sell side, right? Because the flow of the market is still pretty bearish. Now, I'd be paying attention to around this 560 level where we're kind of floating at right now, okay? You want to hold 560 here because if 560 starts breaking down, you can repel price and it could flush right into that daily expected move. So you really, this little area, this little zone in here, you wanna get back above that and hold. But right now, market net flow is suggesting that we go retest or test at least this daily expected move today. Okay. So when I see this right out of the gate, when I see bearish market net flow, where are we? Where is this? Where am I? Where am I? Here I am. When I see bearish market net flow, the very first thing in my mind is, well, I'm not going to be buying the dips, right? I'm not going to be buying the dips because sometimes the dips keep on dipping. And now if this was, the green line was above the red line, and this was gray.
And just of note for Amazon and Microsoft's Xbox Game Pass Ultimate will have members which can access and play hundreds of cloud-enabled games directly through the Xbox app on select Fire TV devices.
Hey, come to me when you can play Fortnite on Fire TV, okay? Ain't gonna happen. Maybe one day. So, what was I saying? Help me out here, people. What's up, FT? So, yeah, this immediately tells me, like, says, okay, if you want to have an enjoyable day today, probably just, and you're used to just, if you're not good at shorting the market, which it's probably the hardest thing to do in the markets is short the market, right? Because you have to be somewhat aggressive, quick, really well on your position sizing. This tells me just step aside. Just step aside and let the market do its thing right now. Okay, we're right there at that 560, which is kind of a key level, and we're not far off the daily expected move.
Just a note for Apple, does announce iPhone event for September 9th. This is according to CNBC.
Apple's announcing their event. Yeah, that's actually pretty typical, right? It's coming up here. It's September. Take a look at Apple. Are they doing anything?
Just repeating that last headline, Apple does announce iPhone event for September 9th. That is according to CNBC. It's worth noting other sources have pointed towards the date being September the 10th.
Okay, whatever. This right here, the 559 level, just above that is the daily expected move, okay? Now, what's up, AA? What's up with General Motors? Oh, okay, now I got that. I got the joke. Okay. GM, got it. Okay, now I want to go into some gamma exposure levels, just so we can get a good idea of what's going on for the day today. And by the way, dude, the market is down 39 basis points. Okay, sky ain't falling. It's basically nothing burger day as we're running into NVIDIA earnings. Okay, 0-date levels 5,600. Look at that. That's the put wall. So there's not much below it. There's not much above it. So when I look at this, that's about 14 points lower. Now, this is the SP 500 chart. I'm using SP500 on TradingView for this. It's Owanda. So you can use CBOEs, right? Their data. I'm using Owanda. It's for its continuity. It's off by like 10 points sometimes. I don't care. But you can use the same levels, right? Sometimes they line up perfectly. Sometimes they don't. They're typically not like exact levels anyway. They're more like zones. But this is what I'm looking at here. So 5,600, and we drew this out, I think, the last live stream. This 5,600 level is going to be an important one, as well as the gamma flip line, which is at 5,560. So this 40-point zone in here is critical for the bulls to hold. Why? Because if we go to net gamma and we look at where we are at 5,600, this is 5,600, we're slightly above that level, slightly above it. Traders are reaching out further, but really below this level, below 5,600, there's not much going on, okay? There's not much going on, which means if the market was going to sell off, it would be below this 5,600. Right? Below the gamma flip line. When you're below the gamma flip line, that is where selling but gets selling, buying but gets buying, and so forth. And where are we? We're above it. So we're looking fine. Okay, that's just where we are currently now. If I look at the 5-day moving average, and by the way, this thing looks like look at this little trend line right here. All right, I mean, we're literally just consolidating. Look at, so we have a low, a higher low. We're currently a higher low. It ain't as bad as people might think it is right here, okay? Let me bring up the 5-day moving average. Where are we there? We're right here. We're above a rising 5-day moving average still, okay? Market net flow, still bearish on the day. Probably see a little bit bounce, and we're right there. That 560 level you want to hold above. 560, I'm going to put a line there on SPY. 560, properties. Okay. Bullish above 560. Careful below it. All right. Boom. Now, where's the sell side coming from, and why isn't it more aggressive? The sell side today is coming from semiconductors and technology. SMH. Right, coming off a little bit here. We did crack the low of this outside day, and that goes with technology too. So we look at technology, and technology did have a pretty bearish outside day the prior day. So not the prior day, but the day prior to that, where we gapped up higher, right? And we closed much lower on higher volume than the day prior. Now we didn't crack the low here yet, or did we? No, we did not. Okay, so we're just trading inside of that bearish day. The dollar bounced up a little bit today, but it's still kind of coming off. Dollar's been selling pretty hard. Actually kind of interested now. What's the Japanese yen is still catching a little bit of its a bit up a little bit higher. Let's take a look at TLT. Bonds look like they're poised to start making another move. Albeit though, the 10-year yield did sell off quite, sold off hard, we bounced, and we're coming back in. Now, the reason why I'd say maybe it needs more time with bonds is because the correlation that 10-year yield has with oil, and looking at oil today, I mean, that's what was holding up the market today was energy, at least prior, right? But look at oil. Oil's making a oil's all over the place, right? Good luck trying to pick a direction here, but it is still within that compression pattern of a series of lower highs, higher lows. Okay, so we're bouncing here in oil, and as we've shown prior, the charts of oil next to the 10-year yield, oil has always kind of led, at least in recent trade, led what the 10-year yield does. So with oil bouncing, is the 10-year yield going to potentially bounce too in the very near future, which means that the TLT might take a little bit more time to consolidate. Doesn't mean it's over and done with, but maybe it comes in a little bit and then, does whatever. Maybe. But if the dollar bounces from this overextended area, if the 10-year yield starts moving up too, that has notoriously put pressure on the markets that we've seen this year, we've seen last year. I can go to year to date, right? So year to date in this, I point at it, in this column right over here, you look at the 10-year yield is down and the dollar is down, and everything else on my chart here is green up year to date. So one might come to the conclusion that if the 10-year yield starts moving higher and the dollar starts moving higher, you might start to see a little bit of red from maybe not a year-to-date perspective, but week-to-date, month-to-date, you never know. All right. EJ, yeah, I can share it. Are you in the Discord by any chance, EJ, or nah? I'm pretty sure I shared it there before. I'll post it in there again. If you're in there, let me know.
Just confirming that earlier CNBC
go to the day
Apple
trade
does
pit
announce
and just
an event on September 9th.
Just say something in there.
That's according
real quick,
to the website.
And I'll reply to it with the opening range indicator. All right, I see you typing. There we go. So I'm giving you the code, so you're gonna have to manually do it in Thinkorswim, okay? Now, the opening range, the one that I just get you, it's a PDF, so just copy it, create a new indicator or whatever, type in the script, just copy and paste it, and you can adjust the time frame of this opening range, right? So the opening range that I have set right now, this right here will show it'll show 1 minute. So you can change the timing to 5 minutes, 10 minutes, 15 minutes, whatever you want to do, okay? I just have it on a minute right now. I don't know why. It just a quick glance at the markets. I think the 5 minute probably is a little bit better to use, but it's fine. Okay. What's up, Oscar? What was the product? Was it futures or options? I'm thinking. Okay, somebody's asking me here about my trade this morning. I just trade the equity. I just trade equity, so I was short SPY. Okay, let me see here. SPY, yeah, Ken's pointing out that SPY is breaking this little trend line. It may be. So we're really see how 560 is kind of holding here. You see how that gamma level is kind of how it could be considered important from what we're currently seeing here. Bullish above it, bearish below it. Market net flow, it's still bearish, but you can see 560 is still that big level here. You want to hold that 560 level. So it's still, I mean, this, and the longer we hold 560, this right here is going to start changing. The structure of this is going to change. It might not change like this perspective, but this will start to kind of go down and it'll turn gray. And then it'll just tell you that the price of SPY is no longer moving with the bearish market net flow. That's all that is. Okay. So still be down here, but this 560, I'll draw out another line here. 560 is that, gamma level for SPY, okay? You want to hold that 560. Do I use SQQ or QID to short? I have. Yeah, I have. So for a swing trade, I'd probably use, SQQQ, yes, I would use probably that for a swing trade. For a day trade, I'll probably just use the Qs because I'm not going to be holding it for multiple days. But if I do a short, or if I do a swing trade where it's multiple days, right, and I'm just putting it on against some long positions, I'll probably just use SQQQ because it's not going to use up a lot of my capital. I can just have a little position on in the background, right? And it's, 3x, so I can save 3 times whatever the capital versus, just going short the common stock itself. Give me a moment. I'm getting a text massage. It seems like there's a little confusion on like my short SPY position, the take here. I'm not quite understanding, so I'm getting asked, how can I short the SPY by opening to sell without futures or options? I'm not too sure what that means. I am just shorting the common stock. Maybe if the question could be re-asked in a different way that I can understand. They're thinking that I doubled my money. I didn't double my money at all. If I doubled my money, wouldn't be on this live stream. I'd be probably booking tickets to the Caribbean if I doubled my money on that trade. Because I use quite a bit of capital. I mean, it was a margin account, so I can short, right? Yeah, so yeah, my short was just straight up. I didn't use any product. I literally just went short the SP 500. Like I sold it, right? Which is, it's capital intensive. I can do that. I'm okay with doing that. It's a margin account. I can take the capital on because I'm not going to be holding it for a day or 2 days. I'm not going to get liquidated because I'm not going to allow my account to get any margin call. So I can totally fine doing that if it's within the realm of whatever I'm willing to risk. So on that trade, I was risking roughly around $200 to $300. And I didn't even come anywhere near close to that because it just went in my favor after the break. That's not always the case. That's not always the case. Yeah, thanks, Annie. Yeah. All right, so that 560 is really holding up here, man. Anybody buy that by any chance? I probably actually would have taken that shot, looking at that stuff.
Just a report from the Nikkei. Hitachi and Singapore Telecommunications plan to collaborate on next-gen data centers. And Hitachi's power and cooling equipment to be combined with Singtel's cloud technology.
Dude. Yeah, but I just wasn't ready for that. So hopefully, maybe some people saw that or caught that. Yeah, so we'll pull up some individual names here. I'm gonna make a watch list, and we'll go ahead and pull. I'll type in notes to a name. Just create a new watch list. How do I do this? Create a watch list. There we go. And we're gonna go. Today is the 26th of August. Watch list. So if you want to, drop your tickers into the chat, and we are going to pull up individual names. On today's stream, okay? Drop them into the chat. Import. Exit. Shit, how do I do this? Okay, STRL. We got STRL, we got ISRG. We got pulling them up right now. I'm looking. Invertia. We got PANW. We got Now. We got Meta. Meta. Hello, Meta. We got GDXJ. Ooh, I gotta retake a look at those miners too. I gotta take a look at actually some of those commodities. Boom, 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 boom. We got Coin. We got SMCI. Ain't no SMCI lullaby. Actually, I'm interested in SMCI too. I was getting ready to pounce on it today, but then it started selling off. Oh my God, you bum. It was looking so good. So I wanna revisit, that one. Cause it was getting tight, but then it broke down. So I'm like, it just always has to be like that, don't it? Just has to be like that sometimes. I guess if you're ready to short it, it was a great short. TLT, we got Amazon. TZA, which I think is just IWM, right? Small caps, but just like add a little 3x to that. A little bit of, dash a little leverage, you know? Dash a little bit of leverage. That never hurt nobody, right? A little bit of leverage. Got Mara. We'll get PayPal. Yeah, PayPal. Let's take a look at PayPal. I got a position in the PayPal. Mara, I already got. Cool. IFF. Oh, I have a position in IFF. I got to check in on that one. I got SMCI. We got Microsoft. Okie dokies. And we got Peloton. Okay. Peloton. The Peloton. Okay. We can pull up Peloton. PSNY. PSNY. You ain't got no alibi. All right. CELH. Oh, yeah. That's interesting, too. That thing has been selling like a dog. So it'd be interesting to see a bounce in that one. We got GRBK. I haven't heard of that one. GRBK. I don't think I have, at least. Green Brick Partners. Dang, somebody's saying that they're up 50%.
Just of
man,
note
on an
for
IFF
Shell
position.
does
That's
plan to shut
quite nice.
in different portions of Zydeco pipeline from Houston, Huma, Port, Neshez for 3 to 4 days, starting on September 24th for maintenance.
IQV, yeah, we'll put IQV. Not too familiar with that one either. Oh, actually, that kind of sounds a little familiar. Got the SPY on the 1 minute flagging out right here. A Gevo. Got Gevo on the list, Tom. Good there. Okay, so if I see any new ones, I'll be adding them on. We will be pulling these up, most likely on the daily time frame. Maybe zoom in a little bit more too if it looks real ready to go. All right, we have consumer staples and utilities leading the way for the day. Consumer staples is putting in a new high again for the year-to-date new high. I mean, this is crazy to me, people. You know why? Is because, okay, gold, right? We're basically at all-time highs, new high for the year, okay? / utilities, typically risk off. This thing has been like completely vertical. We caught it literally legitimately right here. That was the initial look into the trade idea, right? You miss it? Oh, too bad you miss it, but it sets back up. Okay, so this thing has been kind of going vertical, probably needs to take a break at some point, but the thing's still moving. Consumer staples also, right? So risk off assets have been moving up quite well. And it is interesting because technology has not followed that like on this big bounce. That's what's helping these markets out. But it's still pretty decent far off from its high from the year, right? I mean, we're talking 7%, 6% for XLK. And that was from a vertical bounce. Crazy stuff, man. Okay, so just so you know, we lost convergence right here. So, okay, right? This is what we just said, right? So if the market starts holding that 560, you'll see this wane off and start to turn gray, right? It turned gray. So 563 is now the magnet. Look at this, like see this little, how it broke, and we're holding that 560 right there. Come on now, people, here we go. Sheesh. See, now if I wasn't live, I would have been a little bit more prepared to take that. So hopefully somebody else did. But 563, I'm gonna go ahead and clone this out, and now I'm gonna put up 563 back up along here, and go properties, because we're still a pretty distance from that bad boy. Properties, we're gonna go 563. We're gonna go right there, okay? That'd be the upside target of what? That's back to basically the highs of the trading session, back to positive. So we'll see if it gets up there. Market net flow, when market net flow loses convergence and it's bearish, all it's telling us is that this could basically chop around. But more importantly, you typically see counter trend moves, right? So meaning counter trend to the divergence. If the divergence is bearish, which it is, you can see bullish price action potentially, and that's kind of what we're seeing here. It's not like incredibly bullish here, right? It's not incredibly bullish. It's still pretty bearish market net flow. It's just the market is getting some reprieve, being down now only 15 basis points for the trading sesh. Okay? Okay. Let's pull up some of these names. All right, STRL. Give me a second here. Let me turn off this, turn down for what over here? Let me take one more sip of my... I sound like Roaring Kitty? I have to listen to his voice. Again, I can't remember what his voice sounds like. I can't remember. But I do remember streaming his live stream. And that was weird, dude. That was the most weirdest thing ever. Like, what was that all about? That was a weird live stream, man. Okay, STRL. Okay, so right out of the gate, I think I'm just gonna really quickly say, do I see a trade right out of the gate? And the answer is no, I don't see a trade right out of the gate. I do see these little consolidations, and that's nice. So we're seeing a little bit of lift, regaining some of these averages. The longer term trend is up. 200 is sloping up, came down. It's like almost like we flush and kind of like bear trap, right? Boom, we came right back up. But overall, we are still seeing a series of lower highs. 1-1, okay? So if this does start consolidating, it could set up for a retest of this high. You'd want to see the 20-day, like it's currently doing, start to turn back around too as well. So the overall structure of this, yeah, it's still in bullish context, okay? But right now it's kind of through this digestion period, right? So it's not like a super clean, like, hey, should I enter right now? I wouldn't be rushed into this. I wouldn't even care if it came all the way up. That would actually be more bullish and consolidated up at these highs and started like handling out or something. If I go into the weekly time frame, oh, sheesh. The weekly time frame, you can see we've had 3 green soldiers or whatever, white soldiers or whatever they're called. The 3 nice weekly bars there. So really, it just seems like we kind of just We went, you know, kind of extended far. We came back in, we consolidated. Oh, we broke down, but we extended a little too far. And now we're kind of just within this kind of where most volume has been traded. So if anything, maybe look at the weekly time frame, see if you can look at the MACD, potentially start the histogram, start to turn up, this to start flattening out, and maybe cross over here in the near future to see if this starts setting itself back up. But trade right now, I think if you're long, I think it's okay. You can have a stop under this 20-day, or even if you're like a longer term investor, even lower stop. But overall, do I see the trade setup in this exact moment? And that'd be a no. But if you're already long, if you maybe play this breakout here, it wouldn't be anything concerning at the moment at all. ISRG. This one I would definitely wait for consolidation. So we just hit a new high the other day, right? For the year, maybe all-time high. Yeah, that's an all-time high. This thing has been going straight up. So strong stocks typically get stronger. This one, like, look at how sometimes the bases build out for a while. I'd be looking, after this strong move, I'd be looking for the consolidation, looking for a pullback, seeing how it sets back up. Sometimes these type of names, right? If you pull up the ADX, and it's like the ADX is an indicator, right? It helps with trend strength. If it's like greater than 30 and we start pulling into the 20 EMA or the 20 SMA, well, 20 EMA technically is the Holy Grail setup, and we pull into the 20 EMA nice and slowly, then you can play. I have a video on how to play that, but basically if you watch the video on the Holy Grail setup. It's a very simple setup, but it's a kind of a trend following and a dip buying strategy. So I'd be looking for that on a consolidation or build out a little bit longer here. But yeah, overall, just massive strength in ISRG. Let's look at NVIDIA. NVIDIA has earnings around the corner, so it can't spend much time here. But overall, I mean, it's bullish, right? There's no hiding that, right? We're consolidating sideways here. We have earnings around the corner. That is what? When is the earnings? Wednesday? Yeah, Wednesday. So we look into the implied move. It's about 1450. So where we currently stand, I mean, that'll bring us right up to all-time highs. That's if it's one standard deviation, okay? It could go more than that, but one standard deviation as in this current moment would bring us to all-time highs. And if we go down, one standard deviation move would just bring us to about 50% down from this swing low to this swing high, right down in here, which even then, I mean, yeah, a bearish gap down and a move down it'd be bearish, but overall it would still be like a higher low than this. So you'd have to see how it sets up after that point, if that was the case. But right now, I mean, just consolidating, which makes me want to go to SMCI really quick. SMCI was looking real nice. I was ready to pounce on this one today, but we did break down from this low. So this is what I look for, right? I look for these tight. Now I knew the trend was bearish, right? So the trend is bearish because we've been breaking down. We're about what 50% plus off the all-time high, right? Yeah, 53%. But what I did like was we started to get some momentum and we started to cup out here, and price action got very, very tight. Okay, it got very, very tight. So I was looking for a breakout to the upside to play it up, maybe to fill this gap, maybe a little bit higher for a shorter term, more aggressive against the trend trade. But we broke down, and we're seeing it a pretty strong move. So now I don't care about this chart anymore, right? I mean, it can close back up here, and then maybe it resets back up. But in this current moment, with the candle looking like this, I do not care about SMCI right now. I want it to set back up. And that is all. That is it. Okay? That's SMCI. PANW. PANW I like. This one's still holding up rather well. So, this is on one of the other live streams we talked about going into earnings. If we see a big green bar on earnings, we just saw that. We saw it. Then I would wait for what? I say the consolidation. Okay, this is perfect timing too. I would wait for the consolidation. And then what? I said I would try to play the breakout to back up to the swing high and maybe higher. Look what it's doing. We broke out on earnings. Boom. Nice big volume bar. Volume is drying up. Price is pulling back into this area. Now we currently have an inside trading day. So if this is the pullback, I would be looking for a break of this high or today's high to play, boom, up to this prior swing high and potentially even higher. Right? Now, if tomorrow, if this is where we close, like, so Let me go to the 15-minute time frame. Even the 5-day is inclining right here. See, this, when I look at this, it's like, okay, like maybe not a full-size position sort of ordeal, but when I look at this, I'm like, I'll just throw it because I might forget about it, right? I can set an alert, but sometimes I just put in a starter position if it's not even breaking out yet, a starter position just to get me into the name. And then I have a stop at the daily low or the prior swing low. And if it starts breaking out, then I'll try to add to the position more quickly and then just have like a little bit better of an entry. But yeah, the 5-day is still inclining. It's still holding up rather well. We kind of rounded here. Don't look bad. PNW doesn't look bad. I'm going to put this on my list to come back to because I honestly probably might start a little position there. I've been trimming a lot of my positions up. And now I need to start looking to add back in as we're still holding some key levels in the SP 500. That this zone in here and so forth. So who knows how high this market can keep going? So you got to be a part of it if it keeps going, right? Despite how crazy it may be. Okay, so yeah, PNW. I do like how it's consolidating right here, right? I do, and I like how it's in inside trading day. So come tomorrow, if this is kind of how we close, come into the next day, I'd be looking for a breakout of this to see if we can pop back up and see if volume re-enters the chat. Okay. You've been buying ISRG since the 190s? Sheesh, that is quite nice. Quite nice of a trade there. Okay, so I put that one down. I do see people saying about CEG, so I'll put CEG in the list. NOW now. Also, pretty strong looking chart. Pretty strong looking chart. We had a bullish earnings move. It got faded a little bit on the kind of like some market volatility here. And we're just trailing, not too far off the all-time highs. And typically stronger stocks get stronger. So I would imagine we'd probably be taking this high out at some point. Might need a little bit more consolidation. It is a little bit choppy of a name. All right. But volume here is drying up. That volume's drying up. There's nothing concerning though. Nothing really that concerning. Even these down days like this, it was on less volume than the prior day. Okay, this was more of a distribution day, but the buyers stepped right back in, and then we saw more volume on this day right here. This was a super low volume day, but it was a scary looking day. And then we started fading right back up. So yeah, NOW looks fine. Just be aware of the spreads. It's like over $1 spread, obviously. It's an expensive stock. So limit orders are typically the better ones here. We did pull up it in this 20-day, but the 20 is rising, the 50 rising, the 200 days rising. And we started this nice little move up. We're starting to see a little bit more volatility here on these last couple of trading candles. A little bit more swing. So you need a little bit of a stomach for this one. So it doesn't require a big position because this moves fairly quickly. But yeah, bullish context all around. Maybe the weekly time frame will be a little bit easier to see. Now the weekly time frame, I want to hone in on these candles here. So notice the authoritative weekly candle here, and then the authority, right, is shrinking as we are proceeding. So you notice how the bodies of these candles are getting a little bit tighter. So it's coming into a period of a little bit of indecision. So, and then it's getting really small here. And then now we're even trading, obviously today's only Monday, right? So we can very well break the high and we can start seeing expansion again, but I'd just be cautious if we start breaking down through the low and or the prior week low that we come back in and need to digest a little bit more. Meta still looks pretty darn bullish. Nothing new there. I think Meta does need some digestion. That's for sure. We're seeing it pull back in a little today, but some might notice like this larger term ascending triangle type of play here. I would prefer to see something like that, higher lows. So we had a bullish earnings. It got faded. Then we bounced right back up. I'm gonna look at the weekly time frame. Last week put in more of a reversal type candle. So notice this. This is what I was just talking about, the authoritative candle back, then a little bit smaller, and then indecision. And we just broke down that low today. So if we do close under this low of this weekly candle, maybe that requires a little bit more consolidation. So I'd be paying attention to see if we can get back above the high of today and or this week to re-snap up. All right, so they can show back their strength a little bit here. But overall, just today, we are pulling back into a rising 20-day, rising 50. Obviously, the 200's rising here too. Okay. So Meta, it doesn't look all too bad, right? We're 2 days separated from the high. Okay. GDXJ, just a lot of volatility here. Potentially looking for some more consolidation here on GDXJ. All right, so this is gold miners, junior gold miners. You can see it's getting just a little wicked, a little wild over here. So to see some consolidations, tighten up the risk. All right, maybe perhaps this is flagging out right here, and then it's setting up for another run, or it's pulling back a little bit deeper. But yeah, I would say I'd be more interested to see how this consolidates. Coin, C-O-I-N. We'll go into Bitcoin here too, because we did have a sell signal on crypto. So actually, you know, I'm gonna actually just pull that up now, but we didn't get a trigger. So I'm gonna revisit that and show you exactly how it works, how, you know, what I'm looking at here. Because a lot of people might not even know, because I haven't showed it for a while. But a couple of weeks ago, we got the sell signal, but we got no trigger. Okay? I'll show you. SPY's still cranking there. Okay, so this is the sailor to shift tool, and we had our buy signal. We're still on technically the buy signal, buy trigger. Just 1, 2, 3 weeks ago, where we saw a lot of volatility, where we saw a breakdown to like 49,000. That week triggered below the rate of change, and it triggered a sell signal, meaning that, hey, this could be cautionary, but there wasn't an official trigger. Now, this is where it gets interesting, and it might slip a lot of people's minds. Part of the strategy that I came up with was, now we need to get a confirming trigger of the low of the prior week. But what happens if every week from there does not put in a new low? Well, there's no trigger, so you constantly move the stop up unless you get the rate of change back above the 0 point. And if that happens, then you don't get an official trigger, like it did here, like it did here, like it did here, and like it did there. So right now, right, we got the buy signal, and it's obviously down slightly from just under like 68 down to it's wherever it's at right now. Okay, so this low would have been having to take out the week after the sell signal. It didn't. So then we move our stop up to the prior week low. Okay, that didn't get taken out. Now we're in a new trading week. So now the low of this trading week, I'm sorry, not this trading week, this prior trading week, so 58,000, we would have to cross under 58,000 in order for the sell trigger. So right now we're still on the buy signal and buy trigger. Okay. That's the sailor to shift tool, as it's just kind of floating around here. Now let's go back to coin. Coin, a little sketchy looking, to be quite honest. If this chart was inverted, I would literally look at this to go long to play it out, right? Because we see this strength to the downside. It's flagging out. Yeah, doesn't look all that great. It looks very toppy here. This strong move, and then it gets faded, and this kind of like breakdown happened. So I'd be a little bit more cautious. Now we are getting, obviously, it was above a rising 200-day, so that's positive. The 50-day is still declining, so maybe we come back up. Maybe we come back up to around 230, 240 range. Okay, that would just put us right back in the middle of all this chop, right? And then see how it sets up from there. But right here, if I were to enter in, I mean, I just don't feel crazy comfortable unless if I knew where my stop was. Even like in a trade like that, like even a 1-for-1, I just not a huge fan of the setup. Not a huge fan. I wouldn't short it, but I also don't feel like longing it right now. So not much of a take there on coin. SMCI we already discussed. GEVO. I'm not much of a penny stock trader, but it is obviously seeing some strength, right? We saw this big bull flag, or this big, move right here, flagged out. We saw some follow through, and now it's getting a little bit, probably more attention because the volatility is definitely increased. It's up 12% on the trading day. This is the expansion, right? This is an expansionary move. I don't execute expansions unless if it's fading, and I wouldn't fade a penny stock. I just don't do that. It's not my style. So if you are bullish something like this, I'd be looking for the consolidations. If you traded it, this would have been a clean trade. This actually little flag here after a strong move kind of reminds me of that one. What was that ticker called? It was a biotech name. Was it a TGTX? I think. I'm actually interested in TGTX because I was interested in that one. Yes, you get a strong move, but this one happened to break out, and then I'm looking for this consolidation, which it's currently happening. So you get these consolidations, and then I look for the follow through, which we're not getting right here right now on TGTX. So GVO, it's not in bullish context. It's actually going against a declining 200-day moving average, and we're seeing a kind of an overshot here to $1, a big round number. Go figure, it gets faded at that big round number. So intraday, this type of volatility is nice for day traders, but yeah, it's not something that I typically execute into. TLT we discussed a little bit. It does look like it's poised and getting ready for a move. And it might need a little bit more consolidation here. The reason why I was a little bit hesitant on TLT, which I did trade it down here, just up here, quick little hits. But energy is actually concerning me for this trade right now in the very near term. And that's because oil's cranking up right now in this compression pattern. And we know that the 10-year yield has a tight correlation to oil. And sometimes oil leads. So if oil is going to be bouncing here and moving higher, is the 10-year yield going to pop a little bit, which means the TLT might need to consolidate a little bit more. That's a possibility. Amazon. So Amazon, I would also be waiting for consolidations. A lot of these names, man, are just little danger zones, right? We had earnings come out and it really kind of cracked down, and we're seeing these reflexive bounces, right? And now it's kind of consolidating, right? It's still above a rising 200-day. The 20-day is starting to turn around. It's below a declining 50-day. These things could do some fake outs, right? But typically when you get bearish moves like this in earnings, you can get follow through. Not always, but sometimes. So if you are looking at this like, oh, well, we broke this trend line, right? And oh, we broke down from bearish earnings and now we're back testing it. So are we going to potentially reclaim it and then start pushing ourselves back up? That'd be something that would interest me. But right now, even like right here, like it's not that bad of a look, but we did get a pretty bearish, that was low volume. Let me go to the 15-minute time frame. The 5-day moving average is flattening out here. We're seeing just some lower highs, some lower lows. So if you are bullish, I'd look down at this smaller time frame and like say, okay, maybe if you want to play that bounce, I'd be looking for confirmation that we're going to see a higher low and then also a higher high, and then execute the trade knowing where that risk is a little bit more clear to understand. TZA, this is basically IWM, right? There's the bearish IWM. So I'm just going to look at IWM because it's easier to use technical analysis, in my opinion, from there. And you can see that IWM is seeing some relative strength even today. All right. We got like 3 days up. It broke out of this very tight contraction pattern. Then it got faded on all this market volatility in August. And we're seeing a reflexive bounce back, very similar to the rest of the market. So yeah, I mean, it doesn't look horrible, but there's just no consolidation here at all. So I'm just not, I wouldn't be necessarily interested in shorting into this as we're seeing some strength in like energy and banks. That is a little concerning to short into this stuff because IWM is made up a lot of that. And then even like some biotechs, right? Biotech has been looking fairly strong. We're pulling up into this 103 and we're kind of consolidating here. Now, I will say, if you go back through history and you look at when we started cutting rates, it wasn't really good I mean, the anticipation up to it is fine, but typically if something goes wrong, they slam them back down. And that's where IWM looks very, very nice. Actually, I should try to pull that chart up so you can actually visualize what it is that I'm telling you, because I do have that chart somewhere hidden in my charts. Hidden far, far, far beyond yonder. Wait, no, that's not what I want to do. Oh yeah, that is what I want to do. Let me see. Let me see if I can find it for you. Let me see if I can find it for you. Oh, brother. That's going to be a hard one to find. Scooby-Dooby-Dooby. I don't think it's there. I don't think it's an ABC. I think it's maybe April Watch. I gotta consolidate this stuff. But I want you to see it because I say so. It's on default. Somewhere over the rainbow. I'm gonna find it. I'm about to build this chart out again. You know what? I know what to do. I'll just build it. I got an idea. Big picture. There we go. Instead of that, I'm just going to switch it to IWM. Okay. I can't find the exact one, so I just updated it like this. Okay, so this is IWM, this is the 2-year, 10-year yield curve, and this is the Fed funds rate. But notice here, typically, right, when rates are moving up and when they flatten out, the market's still going good. We have an inverted yield curve. This is the financial crisis. This is the dot-com bubble. But notice that when they start slamming rates, when something goes up wrong, right, that's literally when we brought it back down to zero. Then the market started moving up pretty good. Then over here in 2015, 2016, when we started raising rates, right, again, market started to get, it was fine, but it started getting a little shaky again, okay? And then we slam rates right here in 2020, right? Pandemic, boom, we take off like a rocket ship. Bam, we started lifting rates in 2022. A little shaky, but the market's still pressing up higher right here. My point is, small caps right now, they're rallying in volatility, right? They're rallying. However, that's because of anticipation of rate cuts, because they do have more expensive debt, typically, these small cap names. So they like seeing that, oh, rates are going to come off. But if something breaks, which we've seen that now in 2008, we saw that, back in 2020 over here, how they had to slam them back in the dot-com bubble, right? So the question here is, when we become uninverted, when they start lowering rates, are they going to be behind the curve where they're going to have to start pressing them down further? And if that is the case, the question would be like, why would they do that? Because the economy would be slowing at a pace that probably they got left behind in. So they have to do something aggressive to change for that, okay? Which would obviously could once again rinse and repeat what we've been seeing. Now, why would the market go on cheap like when the rates are down low? The rates when they're smashed low, this encourages consumers to spend money, right? When rates are like nothing, even, whatever that requires interest, right? It's cheaper, right? Cheaper monthly payments in a lot of things, cars, autos, homes, whatever the case is when rates are down. Credit cards, and so forth. So consumers can spend more. And when it's higher interest rates, they typically tighten up their belt loops, and because they can save money and make risk-free money on decent high interest rate accounts. Okay, so that would be the only concern here for IWM is the Fed really going to be able to maintain this Goldilocks, no landing, soft landing narrative? I don't know. But I'll tell you this, if the small caps want to continue to rip and go higher and higher, then yeah, you got to be a part of it. And they look fine right now. Biotech, like I was saying, looks pretty decent now. That can obviously change quickly. Biotechs are crazy. But we are coming into that 103 level. We're seeing a low, a higher low. We're kind of running right here in a 103.50. We talked about it when it was over here, when we broke out, right? And then, yeah, regional banks made a big, huge move the other day. And a lot of the bigger banks are holding up rather well, right? So GS, Goldman Sachs, right? We're a day separated over here from its high. Financials today put in a new high for the year. Could be a little extended here, but that's not necessarily bearish, right? Putting in new highs here is not really bearish. At least right now, right? Okay, let me check back into chat because I had to close out some things there while I was doing that. Oh yeah, let's take a look at the gamma exposure levels. Right now we're just kind of floating around here. That 560 level held good. The level that we were watching for was 563 to the upside. We'll see if that actually changed at all. We still don't have the convergence, so that means we can have the counter trend moves, and 563 is still lit up. That's about $1 plus above us still. All right. So yeah, I'd be still paying attention to 563 as a potential target. If you are long, if you play the dip into that 560. Bearish market net flow, so manage how you see fit there. Give me a moment. Go over some more of these names here. Coin, SMC, GVO, TLT. We talked about Amazon. We talked about, yeah, Mara. Okay, so Mara is actually coiling up right here too. Getting a little bit tight right here. Okie dokies. Visa, ZM. Okay, we'll pull up some of those names too.
Of note for Meta, ticker is the name. It does strike a geothermal energy deal with Sage Geosystems to power data centers. Of note, therefore, Meta, ticker is the name.
Oh, really now? I'll put Visa in there. Okay, so Mara, yeah, Mara's a lot of chop city here, but like I said, on the Bitcoin stuff, we are still on technically a buy signal. We haven't been an official sell signal yet, and we're actually kind of cool in here. We had a nice big volume day the other prior trading day, and now we're consolidating. The 200 day is still rising, the 50 day is sloping. So maybe we're trying to make a bounce back into all this volume over here. It's just choppy. It's really choppy here, right? Is it a little extended here on the 15-minute time frame? A little bit. Maybe see if it comes in, sets up. 5-day comes in a little bit. But we're above a rising 5-day moving average. We're seeing a series of higher lows, higher highs. Now, see if it sets up. If you want to continue that trend and see if we actually break out. Yeah, we'll pull up Pinduoduo. That was one I was interested in a bit ago, but I think there was some news around Temu today that really just shoved this into the gutter. Or something like that. Okay.
And a bit further here from Meta, it does note the partnership is delivered up to 150 megawatts of new geothermal baseload power to support Meta's data center growth.
Getting a little bit more of a consolidation here in the SP 500. Just getting pretty tight here. It's only 2 minutes into this candle, right? These are 15-minute candles, but you see a big authoritative candle from that 560. slow down a little bit, indecision. So we'll see if this is just consolidation for potential further move or if it's going to come back in and try to set back up again. I'm going to pull up this time frame and look at SPY. Yeah, nothing much there. Okay. I want to go back to, where were we? PayPal. Yeah, PayPal still looks good. All right, so PayPal broke out of this base. It's at a, if we close here, it's another new high for the year. The 200-day sloping up now, the 50-day, the 20-day. I was looking for some consolidations to add back in to some more of my position. I have a position on because I'm looking from a longer term perspective here. Right? Is this starting to move into a stage 2 markup? Possibly, right? Possibly is. Where we basically went through a decline accumulation phase, right? And then trying to go to a markup. So the 40 week is starting to clean back up, the 30 week and the 10 week. So now I'm looking to find consolidations to add into the core position and see if it does hold. And if it does, cool. I want to catch this thing back up to 100 plus, that would be the goal. But if it breaks down, right? Just obviously get out. But we haven't seen much of a consolidation since this this little uptick here and this little breakout. But so far it is still holding, and I have a position in there, small right now. I entered it on breakout and then I exited a little bit more up here just to have it. And then I was like, if it consolidates, I'm gonna try to re-add in. And right now it's not giving me that setup. So if it goes like this and then comes back in, or if it goes like this and whatever it does, I'll look for the re-entry. It's going to be hard to shake out my core position at this point though, because it would have to come down here basically, right? Or even potentially just, it would probably be down there would be my core position. Short I think is still on, and I haven't changed it from that point yet. IFF. So also another longer term position that I have on right now, that I placed on, hopefully if it still holds, for more of a trade around position. But IFF on the weekly time frame, we've been seeing this multi-week consolidation here, and we're trying to break out from this like level of supply, right? And it's basically right around 100. So we're early in the trade if it wants to continue on this uptrend. The daily time frame here, you can see that we've ran into supply multiple times. We got shaken out a little bit here in early August, so it moved with the market. So if the market's going to come off hard and fast, and maybe this follows too, that's kind of the unfortunate thing. But we are above a 2050 200-day, so even some more consolidations to potentially build that base and seek some continuation is what I'm looking for here, okay, on IFF. So overall, I still have a position in IFF. Nothing crazy. Microsoft today. Microsoft is looking a little top heavy, right? I still like how we're above these rising 200 days. 20 days sloping down, 50 day we're below it, and this could be a lower high, technically a lower low too. Lower low, lower high. So you really want to see us creep back above these levels here. But right now, right, you might look back in the history of this and be like, dude, if it comes down here, people might say this is kind of an advanced head and shoulders pattern. If you go out to the weekly time frame, I mean, you can really see that here, right? So if people will look at that, and that's a possibility. Who knows? Who knows what we're stepping into right now, right? We have a lot of things happening around right around the corner. We have the elections, we have geopolitical problems, we have some interesting stuff going in risk-off assets. So we might look back at this in a year from now and be like, it was so obvious, dude. It was setting up this topping pattern while we're about to move into a place where we're going to start cutting rates, which historically has not been a good time. It was when we cut the rates. You might be thinking, why? Why was that historically not good? Well, that was the chart that I showed just prior to this. So you just got to be on your game. Be on your game, right? So that's Microsoft. I'm not really seeing much of the setup here, but if you are like a longer term holder, the 200-day is still technically rising, so that's positive. Shorter term, we're seeing a low, lower low, or sorry, a high, lower high, lower high, lower high, and some matching lows there. So you'd want to see that obviously change, and you'd want to get back above a 5-day moving average that's rising, and it's not there right now. So this is more of like, hey, can I kind of stay clear until the market provides, I guess, proves itself. Zillow Group. I'm not too sure. Did somebody say Z? Zillow, we're pulling kind of up into this area here. So if this is going to be something that bases out here, and then we watch a breakout, I'd be interested in that. But yeah, right now it's just a really strong move. So I'd be looking for consolidations there in Z. I don't know if that was actually one that people wanted to see. Peloton, I'm not really interested in Peloton either. I mean, clearly we're getting a bounce and some relief. That's obvious. I mean, that's going to happen in these names that are, basically just been hammered. You're going to have an earnings move and you're going to get some strong moves. So if you were interested in something like this, I mean, I'd be interested in more like a very shorter term play. So if we do start like consolidating, right? Consolidating, flagging out, maybe there's an opportunity for a quick little hit. But the overall trend of the market's pretty bearish here for Peloton. Sorry. Earnings happened, follow through, or you had the earnings, had some follow through. So that's a decent sign, but the 200-day is still technically declining. It's going to be a while before we start averaging out some data and averaging in new data to see if this thing can start flattening out and turning back up. Meanwhile, the 50-day would have to start coming back up too. The 20-day would have to start creeping back up too. So it can set up little flags and stuff like that. If we're going to start moving higher, then yeah, cool. But I think it needs a little bit of time versus just like, hey, enter right here at 492, because I wouldn't want to take a 492 and then all of a sudden come in half of that down to 421. That's a pretty large decline, right? For kind of hopping into. PSNY, another name. Like these are these dollar names. I'm just not much of a trader in these. But we have earnings around the corner here. 50-day is starting to flatten out to turn back up, and we did consolidate here. So if you're just looking at the technical basis, and today we saw a little breakout, we're kind of floating around that 1. So hey, yeah, you never know. Like this could pop up and go come test that 200-day. Earnings is around the corner, so be aware of that.
According to Reuters sources, health insurer Elevant Health ELV also initially expressed interest in bidding for the company, but a Reuters source said on Monday that the company has now dropped out of the process. So that's Elevant Health dropping out of the process, potentially acquire Elevant Health, ticker EVH.
I'll put BMY up in there too, yeah. Let's take a quick look at the market. So you see a little bit more volatility coming in as we started trying to contract here, smaller candles, getting a little bit of a shakeout here. Market net flow, still bearish, and no convergence. 560 is that green bar, 561 is the red bar now. Price attracts to the red bar, we're at 561.19, so coming back into 561 would be a level to watch, which we already did. Actually, we tagged into it, and we're kind of bounced from that level. And then 560 is still that big green bar, so you'd want to hold bullish above 560. After consolidations, obviously, but a little bit more careful below 560. Okay, that was, what was that? PSNY. Celsius. At some point this thing is going to really probably bounce hard. I was kind of watching for this gap fill down here, and we did closely come to it, but we didn't actually quite tag it. So maybe I'd watch for maybe if this comes back down and undercuts and turns back up, maybe, buy the U-turn, back up and maybe we see it bounce. But if that doesn't happen, I'm not really too interested in this. I've traded it a few times, caught a little bit, then broke out. I traded a little bit, caught a little bit of a move to the upside, took out, and then stopped out, broke even a couple of times, and then lost a little on some others. And that was like more, I think in this range over here. And I haven't really touched it too much, if at all, since. But yeah, to see this thing bounce up at some point, definitely a possibility, but the trend is pretty darn poor. It's kind of flagging out here. I'd be looking for this gap fill down here and maybe like a little undercut to turn back up. I wouldn't short it, but I'm not interested really at the moment to put in any money into this one. GRBK. There's nothing going on wrong with this one. This one's been very strong. So if you're in it, cool, congratulations. There was a pretty big base breakout over here. The volume in this is not like crazy good, but it's definitely okay. Definitely to trade, right? To put on some swing trades. But just be aware that the volume's like averaging probably around a couple 100,000, a little bit more than that. But new highs today, right? So new highs for the year. I don't know all time. Yeah, I don't know about all time. But even right here, you can see the weekly time frame. This was a pretty nice setup, right? Boom, we broke out, saw the pullback into the 10-week moving average, seen some follow through. So if I was to establish a new position, I'd wait for the consolidation. But overall, if you catch this on the weekly time frame and played a breakout, this is kind of what I was looking for IFF, right? So if IFF, it consolidates and we break out, awesome. And I'll look to like sell into some of it, and I'll try to see if it resets up and plays. But right now, yeah, it looks strong, and I wouldn't issue a new position into here. I'd be looking for the consolidations, offer up a little bit better risk. IQV. IQV is getting pretty tight here, right up into this too as well. So I'd still be looking for the consolidation in something like this, but 200 days starting to slope up. 50-day now just crossed back above the 200-day, and the 20-day sloping up. So it still looks pretty good here for IQV. I'm not too familiar with what this is. And if it flat consolidates a little bit more here, yeah, to come back to these highs could be the trade there. CEG. I was interested in CEG up until the point of this breaking down. So right now I'm not really interested in it unless if it kind of resets itself back up. And it just hasn't done that yet. It's been a little sloppy here. Now we're kind of butting our head on this 50-day. So if this starts turning back around, the 50-day starts kind of flattening out here, maybe we come in and do something like that, I'd be a little bit more interested in it, right? And to try to play it back up. But if I extend this to the right, you can clearly see that we might have some trouble up in this little downtrend here where we're having a series of lower highs. So if we start taking that out, that's what I'd be probably watching for with CEG, Constellation Energy.
On the elliptical footing here, and according to
Visa,
Amikai Stein does note, sources familiar with the negotiations do tell him the current approach in the talks is trying to reach agreements on the easy problems, and the attempt to focus to try and reach a solution on the issue of the Palestinian terrorists will be released and the Israeli veto on them, and to postpone the difficult issues until the end, such as the Philadelphia corridor and the Netzarim corridor. And you'll just add, source with knowledge of negotiations do note there is dialogue, there is progress, there's even a good atmosphere, but also quite a few difficulties. That is just from Car News' Amikai Stein.
I see some more tickers coming in the chat. We'll pull those up. Give me a moment here. So I'm almost through this current list. Visa. Yeah, so Visa's been seeing a series of lower highs, so that's not the greatest sign. But what is good is the 200-day is still rising. And that's positive because you have the undercurrent of a stronger trend. And if you look to the weekly time frame, right, we broke out, we saw a nice big move, and now we're kind of potentially consolidating a little bit, a little bit crazy over here, but we are kind of pulling back, handling right here. So if it's going to come in and we're going to start recapturing that 40-week, maybe recapture the 30-week, I think it does set up to retest these highs and potentially go to 300 and see some continuation. So I like the look of that on the larger time frame, but right now it has to kind of prove itself. So I'm looking right now, and it's trying to get back above the 200-day. That is inclining. So if it can kind of go sideways a little bit more here and then start breaking from this trend, I like the look of it. But right now it was like from here to here is a strong move. Okay, and I don't like executing into the strong move without the consolidation. It has somewhat consolidated here, but it's just a sloppy consolidation, and I'm not a fan of the sloppy consolidations. Now the 5-day moving average is flattening, and we're starting to see that strength, and it's kind of coming in like this. So it looks good at the current moment, I would say that, and it looks good on the larger time frames and even the larger trend underneath it. I just prefer to see a little bit better consolidations and not like all this chop. So maybe if we start breaking out higher and start like maybe changing, like, so for example, you see this low right here, you see this low, so we saw a lower low, and then all of a sudden we see this, that's a higher low, and now we just got a higher high. So that right there could be the structural change that we need to see to change from the series of lower highs, lower lows. But we saw that here too, right? Boom, boom, and then it faded. So maybe this would be the more specific kind of area, 275. So if we come in and we start breaking from that and then consolidating through, that might be, you know, more of a better trade when you have a little bit more established consolidation. Pinduoduo took a huge hit today. I think this was on the basket of some news, something to do with Temu, I think. I can't quite remember. But yeah, this one was looking interesting right in these areas. I didn't trade it because it kind of was shaky right here. I missed that move. And then today, I'd be just watching out, like get out of its way, let it consolidate, let it do its thing. Yeah, that's a big move. Big move, which is a little concerning there. Tesla. So this day was a distribution day, right? Where we kind of went higher. We had this outside day and we're just trading within that with these last 2 days. Okay. So I'd be looking for a breakout of this high to kind of take out this, you know, the distribution day, to ignore that. But right now, I mean, it's strong move up. Then we get this distribution. Now we're trading within it. We're consolidating within it. Overall, we did break this trend. We're holding the 200 day that's flattening out. So even if it comes in, we might still be able to hold it, right? And the 20 day, 50 day still sloping up. So if we start breaking through this stuff, it could set up to come retest these highs or potentially fill this gap up here at 240. If I go to the 5 day moving average, the 5 day moving average is flattening out, and you could see that we've got above it a couple of times. We've cracked back down below. We're seeing still a series of lower highs and then the lower lows, and we're kind of bear flagging right here. So I think it needs to prove itself, if anything, before executing into. BMY, Bristol Myers Squibb. This one was one we were watching actually back here because it's just a big company and it's been getting completely thrashed. And we just kind of thought like there's probably going to be a bounce at some point here in the near future. We got that, and then earnings even confirmed it further. But yeah, this positive divergence building in the RSI. We broke out here, consolidated, earnings came, boom, and now we're kind of consolidating once again. It's going to take time, right? The 200 day, it's still technically sloping down. But if I go right from here and I go 200 bars out, right? That's 200 bars out. So all this data, if you average the close, it puts us right here. So as time proceeds, we're going to start losing this data, and we're going to gather whatever else data. So you really want this to consolidate up in these areas, because when we start averaging just this data in, that's a lower average. So it's going to pull the 200 days still down. All right. So the longer we stay up here, it's better, because then it'll start flattening itself out to turning up, and the 50 day will obviously start sloping up too. And it could give us maybe a new base to break further out. You want to see these trends start to really kind of change, and they're slow moving trends. You go to the weekly time frame and you can see it here. It's like, oh, you know, it's been an bearish trend. Okay, but we're kind of consolidating here on the weekly. And if we can hold this, that'd be a positive sign for BMY. HYG over AGG, the chart that matters. Are we talking credit spreads? CHIP, EQT, and mRNA. I'll pull up mRNA. I liked how it was setting up when we broke out of this base, and I was looking for a trend break, but I haven't had this on my radar for a minute. I wouldn't trade it into earnings. But right now, I don't like the look of mRNA at all. I just would wait it out and see how it consolidates and sets back up. But right now on this big breakdown, we're kind of at those lows for the year. I'm just not interested in it. What's up, CJ? We'll take a look at IWM2 intraday. So mRNA was one of them. EQT. Also kind of same thing there with EQT. It's a little too choppy for me. HPE, is that Hewlett Packard? Yeah, a little bit all over the place again. I'd just be waiting for these consolidations. This thing is like, look at this thing. I mean, man, it's all over the place for this year. It's like, how do you trade this? You get swallowed up. Maybe got to go into the larger time frames. I'm like, oh, okay, maybe it's breaking out of this base and we're seeing this volatility, but man, yeah, it's just kind of all over the place for me. You know? Maybe if it can, like, that'd be a big bear trap there if it sucks back down, but like if it comes back in and then resets back up through 20, maybe that would be the thing to watch for on a larger time frame for HPE. It's just hard to gauge this stuff when it's so volatile. Thanks, CJ. Yeah, fam, good. Appreciate that. Mara again, you said? A 5-minute chart? I'll look at the 1 minute. I set it up right there. Yeah, we start trying to break that little high there. Good call. Good call out. We're above the opening range, and it's moving there. And on the daily time frame, right, we were kind of talking about how it's consolidating here. We do have kind of a divergence building in that RSI. I would have liked to see a little bit more consolidation, but it's pressing right now. These things can squeeze, man. They can really squeeze. It's not my favorite type of setup, so you know, if I was to trade this, it'd be a lot lower amount. But we are breaking this high, and we're seeing a series of higher highs, higher lows. So see if this thing could get any wheels. The 1 minute, you can see here, the 1 minute time frame. Right, you're seeing the low, higher low, higher low, higher low, higher low, higher low. You're just getting very tight, right? The volatility is contracting here. We broke out, and we're starting to see that little squeeze. You never know, man. This thing could. These things can get going on a daily basis. AMD. So on a lot of the semiconductors, yeah, credit spreads, Chip, yeah. On a lot of the semiconductors, I really want to see NVIDIA earnings come before. I was interested in trading like SMCI, but it broke down today. I was interested in AEHR, but that broke down the other day. So I had to move past that. Well, AEHR set back up, so that's actually kind of good. Was this a semiconductor? Or I think this is the one that I was watching. But yeah, I like this tight consolidation. This breakout makes me no longer interested. It's set back up, and now we're seeing some follow through today. So that's actually pretty nice. I missed this because I wasn't paying attention. But then SMCI was one that I had my eyes on. And you can see that this broke down from the tight consolidation today. And I'm no longer interested in it unless if it does exactly what AHR did. Right? AHAR, all of a sudden, after a big red day, it came out to green, and then it set back up, and now we're seeing follow through back through that. So a little bit of a shakeout before the move. So if SMCI wants to do that, cool. But yeah, I prefer to see these names get earnings because, like, for example, if NVIDIA earnings is great, probably AMD goes up with it. If NVIDIA earnings are bad, or even if they're good, but the market decides it's bad, you could potentially see AMD go down with it too. But right now, what are we doing? We're a little slop-tastic, a little choppy all over the place as we're approaching Wednesday with NVIDIA earnings. So, pick. Hey, what's up, Eco? Pick, P-I-C-K. iShares. What is this? Mining? This one's a little bit too all over the place for me. I'm not too familiar with this ETF though. I'd have to look into it, but it is you know, pretty darn choppy. 5-day moving average, it's trending up, so that's positive. The weekly time frame, it looks like silver in a way. But yeah, a lot of sideways chalk, so it's kind of all over the place for me specifically. But we are seeing a little bit of strength here on this bounce back. I'd have to look into what that is. Mazi, M-A-S-I, that does sound a little bit more familiar. This one actually could be a decent setup. Now, it is also very choppy here, but look at the 200-day, how it's kind of floating itself back up. And we got back above it on that earnings. And now we're kind of pulling back into the 50-day, 20-day. So I'd want to see it reclaim the 200-day and maybe press higher from that point. But yeah, we saw this bullish move, and now it's consolidating, it's flagging out, and pulling back into these averages. So yeah, that could be a setup there. I'd want to see it prove itself, though. I want to see it turn back around. And then maybe the 5-day moving average start to flatten out to turn back up here too. Massimo. Yeah, maybe dig into it why it was different than GDX. Because the GDX, right, if we're looking for a bullish setup, I mean, GDX is holding up a lot stronger, and it's probably because it has like, I think it has like bigger names in it, like probably Newmont and stuff like that, right? So GDX, if I go to Newmont NEM, like Newmont's at new highs for the year today. So probably has some Newmont. AEG, right? Is it American E? No, AGE. AGE? What's Anaco Gold? I can't remember. But yeah, I'd look into the holdings maybe and go from there. Some natural gas. Man, what's up with that? I haven't looked at natural gas for a while. I'm going to look at NG, actually. They call natural gas the widowmaker. I think you can look. I think you understand why when you look at this. When you look at the chart, it's just all over the place, right? You can make great money, but you can just basically just lose a bunch of money. Boil, yeah, it's the same thing, right? It's just trending down. When it goes up, man, it'll be this quick hit, hard to time it. I'm just not the natural gas guy. I never have been good at it. You know, like imagine catching it, like, oh, it faded hecka hard right here. And all of a sudden it's up like this, straight up. And then it fades hecka hard. Probably go into a cycle at some point where this starts moving up higher. But man, this thing is it's just too hard to time. I want to take a quick look at the markets and we'll pull up some more of these names. So energy, yeah, energy is still kind of doing its thing up here. It's a quite choppy. But with crude oil kind of ticking up today. Now, I think the big thing is to watch crude oil here because crude oil is still within this compression pattern. So we got to see a break of either way. And if oil is going to continue, boom, and break through this, I mean, that's going to put the inflation stuff right back on the radar, right? Higher price oil, more pressure on consumers, more pressure on things like transports. And then we're moving into like an era where, I mean, that's a big topic of discussion, right? Going into this political stuff. So maybe that's when it breaks, is when we get that clarity of, you know, politics or whatever. S&P 500 still pulling in here. Market net flow. We may be gaining convergence back. It's still gray, but it's been red. Market went down when it started turning gray. What do? We started moving up higher and just kind of went sideways. Bearish divergence, no convergence. 560 is still the main hit there that we want to stay above. 561 is the magnet, which we're at 560 right now. It's kind of just that magnet. Nice chip. AUR. I'm not too familiar with AUR. So AUR, I'm not too familiar with this one either. Aurora Innovation. Is this like cannabis by any chance? Sounds familiar. But also, these lower price stocks, they are hard to trade. But I will say that the 50-day sloping up, the 200-day starting to slope up. It is a little sloppy, right? Like, because just a move from this 525 down to here, 328, those are large moves from a percentage basis. So you do not need a lot of capital in these names if you're going to hit like a big winner. But if you look at the weekly time frame, you can see here, it looks like a cannabis name. You can see it started floating up. We kind of undercut it. We came up, right? And a lot of cannabis names look like this. So it probably is that. Maybe not. But yeah, we are pulling into these prior highs right over here as it consolidates. So yeah, these could be potentially good longer term holds, right? Especially if cannabis starts picking back up again. If you want less volatility, maybe you go into something like MSOS. That one, the chart itself does not look great. What about MJ? These ones looked really good earlier in the year, how we started breaking, started moving up, boom, and the 200-day rising. But man, this volatility just throws you off for these cannabis names. So maybe it's not cannabis. I don't really know. Maybe you are. Oh, it's a self-driving company. Thanks. It kind of just looked like a cannabis company, how they usually trade. What's up, Ref? The sailor to shift tool we brought up a little bit earlier. So I'll revisit the sailor to shift tool right now, actually, just so you guys have all an idea. But the sailor to shift tool, it did trigger a sell signal, but it never got the trigger, right? Signal, no trigger. And it's been that way now for a couple of weeks, a few weeks. Let me pull it up. Oh, it's right there. Okay. Second here. So, yeah, we had the buy signal, buy trigger over here, and it basically, you know, went up a little bit higher, a few thousand points or something like that. And then it got flush on this market volatility into August. And then this day, that week, right, where it came all the way down to 49,000, that was the sell signal. Okay, the sell signal basically says now the trigger would come if we close the next week, if we cross below it. Well, we didn't. And if you look up here, we're still in, you know, below the negative rate of change or below zero. So then you have to move your stop loss up, okay? And then it's okay if the following week then gets below the next week. And then guess what? We didn't, okay? So then you move your stop loss up again. Okay, so now where are we trading? We're trading at roughly around just, you know, 63, 64,000. So now if price comes below 58,000, which is last week's low, that would be the trigger. Now, if we don't cross that, then we move the stop loss up again until this crosses back above zero. Then if that's the case and you don't actually get a trigger, it would end up being a no trigger like we've seen in the past. It would be a false, no, it wouldn't be a false, it was a real signal, but it would be no trigger, meaning that we just kind of held through the volatility is all that would technically do. But right now we are in the sell signal area, but officially still on that buy trigger. And then the stop moves up every week if we don't cross through the low. And then we basically ignore it altogether if we go back to a positive rate of change. Somebody asked about IWM intraday. IWM intraday, it's a little too choppy right now for me. It's kind of all over the place. It's below its opening range for the first minute of trade. So I don't really see anything executable right now on something like IWM, which is a little all over the place. Financials. Financials is fading from the high, and we're kind of coming below that opening range. This kind of stuff, when I see financials doing this, let me see energy. Energy came off quite a bit today. That kind of stuff, and then seeing technology down 1%, this kind of tells me, like, you know, be a little bit cautious here, because if technology starts breaking from this right here and heading lower, that's going to put pressure on the markets, and we might see more of a correlation take place here in the markets, meaning that the SPY could come back down to that 560. And if we break through 560, we can go still test that daily expected move. Market net flow is starting to get that red convergence there too. So that's not a good sign. So 560 is in sight for that. We'll actually see how that trade sets up if it does. I'm interested right there. Okay, let's see here. Anything else happening? No. Yeah, Market net flow convergence is picking back up. So that'd be the concern right now. So I'd be on pause. I'm going to look into some of my names too. I want to revisit some stuff that's on my list right now. Thanks, JYL. Yeah, everyone. Right now I'm not a fan of this market structure right now, people. Okay, not a fan. Not a fan. Watch for 560. Rare is in the healthcare space and broke out. Oh, Rare? RA, is that a stock or is it like a... Oh yeah, a lot of healthcare names are looking good. I don't know what this one is. Maybe it's pharmaceutical. Yeah, a lot of these biotechs too. I'm gonna actually look at Labu. Labu actually showed up on my tight list. That's a 3X fund. Didn't show up, I put it there because it was getting pretty tight. Same with XBI. XBI is doing the same thing. I'd be cautious here. Let me go back to Market Watch. I want to go to Visualize. NVIDIA is only down 2%. There's a lot of green on the screen, so let me go to the Index Watch and look at the S&P 100. Yeah, we have 67 advancing, 34 declining stocks. We're getting led by Tesla is the one that's really bringing us down here. And then also AVGO is a big name that's getting kind of bogging things down. But we are starting to see a lot of these names, like for example, COP. It's an energy name off the highs of the trading session. AMD, I mean, that's well off the highs of the trading session. That thing was up almost 2+%, and now it's down almost 3%. Huh. Here we go, coming down to 560. All right, let me see if anything changed structurally here while this is happening. So this is that bearish market net flow. That's that kind of cheat code. 560 is still that magnet, or sorry, it repels price. So you want to hold above 560. If we start really actually crushing back below it, that's not a good sign. But we're right there right now, okay? We're right there right now with negative market net flow. I want to just pull up. I got to pull up my portfolio. I want to see what's going on here. So right now, 560 is holding. I'm actually doing all right today. Oh my gosh. One of my names is up 10% today. That's why. I don't even know what this is, dude, but this thing has just been ripping, dude. Ripping. I gotta look at this. COMP. Look at this thing. Hello. I'll probably exit a little bit of this today. Actually, there's no need to. I've already done that.
And just continuing the geopolitical footing here. White House does know negotiators meeting now in Cairo for talks on the Gaza ceasefire. And US expects working group talks to continue for at least the next few days. Okay,
yeah, so COMP, we talked about the live stream. This was, I don't know if this was on a trade idea. I think it was just I think it was on my tight list. I can't remember, but I definitely talked about it on the live stream. But if I looked at this, I was one of those ones on a weekly time frame that I was like looking at this larger base, and the 40 week was starting to pick up the 10 week and so forth. And it's starting to break out. So maybe this is a bottom of some sorts, or maybe moving into an early stage markup. So I put on a position, I've exited some, and now I'm trying to trade around the core position. This thing's up almost 10% today. You can see how we saw strength here, have pulled in a little bit, and we're seeing some follow through. I'm actually now interested in how is SA looking. SA was another one traded, and this one's flagging out here. Could potentially see some more move up, maybe up to 20 plus something like SA, I want to see how this kind of consolidates a little bit more, see if I want to add into it. Cube was one that took off for me. This one's down a little bit on the day. It was up a little bit higher. The main target was this kind of zone in here, but this one built a nice base, consolidated tightly, and started moving through. EXR is one that I didn't trade, but it's pretty similar to Cube. Same thing. All right, it looks very similar. Got really tight here. I love that look, that little very tight look, and then boom, finally, we move. NEE, I'm still in. This one started breaking through this pivot today. We'll see if it actually can do it this time around. But you can see it acted as supply, kind of cupped, acted as supply, kind of handled. We broke from that, and now we're kind of right here, right now on, this is the #1 holding in XLU. So if I look at XLU, it's probably somewhat similar, right? Somewhat similar. This one's obviously clearly a little bit stronger, but the beta in NEE is pretty strong. So we'll see if this comes in a little bit. I would imagine NEE is going to do the same thing. Or if NEE comes in a little bit, I would imagine utilities would come in, yeah. IFF, I still have. PayPal, still there. Guild, GILD, I still have on.
Attention note here for Marriott ticker MAR. Unifor does note Residence Inn strike does end with new contract ratification. And the contract with Residence Inn ratified on August 24 does include a 12% wage increase in the first year, with total increase of up to 26% by the end of the agreement.
Okie dokie. Really pinging between that 560 and 561 here. Let me see if anything changed from a SPX 0-day perspective. 5600, 5650. 5600, 5650. Okay, so with bearish market net flow, man, this 5600 has just been that magnet, man. Magnet just comes in, comes in, comes in. Still in positive gamma territory. That 5600 with bearish market net flow looks like we can come back down again. So I'm not interested in buying this dip yet, even though that we're holding 560. I'm just not interested. We're like right there, right there. So if we start breaking down a little bit further, maybe watch the lower daily expected move. But 560 is still holding. Okay. Somebody had mentioned ZM. Zoom video. Yeah, this one's seen some massive strength. I'd be looking for the consolidations and see if we could play from that, right? But a big earnings move, right? Boom, we saw that. Now I'd be looking for the consolidations. I'm not going to enter in like after this strong of a move, but I'd definitely be looking to see how it consolidates. So anytime that we get the big breaks on volume, I like to at least keep an eye on it. Tesla, we did talk about. Tesla is the one that's kind of holding us down a little bit today, but it is really just an inside trading day from this day, right? We're still trading within that kind of big volatile day. We saw a big move, and now we're seeing a little bit of, digestion of that move. So really, for Tesla, I'm looking for, I don't know, maybe even a break of this little trend line right here. Right, where you get this like dip, this head, maybe, and then potentially break through this level. That could be something to watch out for, to retest maybe up in the 260, 255, this kind of area. But right now, I want to see strength in Tesla before executing into it, because right now you're below a declining 5-day moving average, so it has to prove itself, and it's not doing that right now. There's the break of 560. There's that break of 560 into the 5-day moving average. Market net flow gave us an insight about that. It's still bearish. Here comes the daily expected move. Not too far off of it. So this is why I like this thing as a cheat code, is because it tells me not to try to buy that dip. I'd been much more interested in going long here to play it up to 563 until we started noticing the structure of this change again. Okay. The IBD follow through day. Oh, the How to Make Money in Stocks book. Yeah, I can do that. Let's do that. So the update on the follow through day. So we were talking about, you know, finding market bottoms, and no bull markets ever started without a follow through day. And this is based off the work of William J. O'Neill. For those that don't know, if you want to watch that video, go watch it. But basically, you know, we try to find a market low after, you know, some sort of a correction, and then you look for the attempted rally. So you get a low and you look for day 1, day 2, day 3, so forth. And typically day 4 through 7, you can get what's called a follow through day. And that's where you want to add exposure back into the markets. A follow through day is a day that's up 1.2% or more and higher volume than the prior trading day. So you got this day right over here that was up more than 1.2% with higher volume than the prior day. So this was the day that we say, okay, now doesn't matter what people say as far as like headlines, news, you start to look to add exposure back into the markets, because no bull market has ever continued or started without that follow through day. Doesn't mean it can't fail. That's not what that means. So if you play the follow through day, your stop would probably be below the low of this trading day. And so far, you get small exposure back into the markets, you start building in, and the market's looking good. Then we had another follow through day. I believe it was this day. I believe it was actually up enough. I can't remember. I thought we had 2 follow through days. Yeah, it was this day. Sorry, this day and this day. So we had back-to-back basically follow through days. That's a bullish sign. And we just haven't seen a consolidation of that. Now we're starting to see it consolidate a little bit. Nothing structurally broken, but it is worth noting that this right here is considered a distribution day, meaning that it was down a decent amount here on an outside day with volume that was higher than the day prior. So if these distribution days start building on one another, where we get 4, 5, 6, 7, like back here, you can see we had a distribution day. Over here was a distribution day, right? Let me see here. Over here was a distribution day. Over here was a distribution day. Over here was a distribution day. Okay, so they started building. There was 5 distribution days right there that gave us insight that there could be sellers, you know, stepping in, you know, larger than normal selling, distribution, and then we kind of fell to the sell-off. This is day 1. Now, if we have a lot of volume on this day, it could be another distribution day that we'd want to watch out for. But right now, yeah, you'd be looking for more bullish setups than anything. And then on top of that, I like to add, we're above a gamma flip line. We're above this kind of zone in here that I've been marking that's, you know, technically bullish. We're above that still. And then we're above a 5-day moving average, which I think we still are. We're crossing below it, but it is still technically inclining at this current moment. So if we start getting below it and it's inclining, it's bearish, but with caution, because you can have snapbacks right back. Okay, it's when this starts flattening out to turning back over, that's a little bit more, you know, take your foot off the gas a little bit more there. So that would be the update on the SP 500 from that perspective. Hope that helps. Thoughts on Docu? Let's take a look at Docu. Earnings is around the corner. I don't like initiating into earnings. But overall, I mean, the 200-day is sloping up now. The 20-day, the 50-day, they're kind of very, very. I'm
making you
what's the word that I'm looking for?
9 minutes time on top of the hour. We're going to look at from remarks from Fed's Daily, so of course a 2024 voter who is partaking in a business television interview. Just recapping some of her latest remarks. She last spoke on the 5th of August, which did note the risk to Fed mandates getting in more balance and minds are open to cutting rates in coming meetings. She added the concern that they will deteriorate from current place of balance in jobs report, and they do not see that right now. On that July jobs report, she did note it reflected a lot of temporary layoffs and the hurricane effect. And she added the Fed will do what it takes to ensure they achieve both goals regarding the mandate, and that if they react to one data point, they would almost always be wrong. Just making you aware at the top of the hour, awaiting some remarks from Fed's Daily, who is of course a 2024 voter.
Yeah, so Docu has earnings around the corner here, but I do like it. You know, it actually just put in it's breaking out currently right here. That's a positive sign. Now it's putting in a higher high. Overall, we're kind of flat, but you do have these averages getting very close to one another, and we're getting price above it, and they're starting to turn up. So this could be a good sign here on this Docu sign. If you go out a little bit further, right, you can see it's been building a base for, you know, quite some time. Could be accumulation, perhaps. You gotta have to look into the volume. Like this is a big volume week. Not as big volume, but to the downside, this were some big pockets of good volume here. So yeah, it looks actually like it could be setting up. Unfortunately for me, I don't like the new position into earnings. I'd prefer to, even if it was a big bullish earnings, I definitely would have this on radar. So if this was just like a big, like if earnings came and was like boom, right? I would definitely have this on radar because that means we would have broke out. It would be big volume on earnings. It passed. Then I would be looking for the follow through, consolidation, and to try to play more up into
Iran remains postured and prepared to attack Israel, and the US is in constant touch with their Israeli counterparts and was throughout the weekend.
IRM. Yeah, IRM looks, geez, yeah, this thing is vertical. It's a REIT, Iron Mountain REIT. Yeah, I mean, sure, this can keep going. It was a new high today. I would be watching for the consolidations, right? We did consolidate somewhat here, but yeah, like I would prefer like a larger base to be built out versus just entering right here. But yeah, I mean, this thing's completely vertical, so that's great. But yeah, I'd be looking for a base. Personally, I would actually want a longer base now that it's made this gigantic run so fast and so furious. But yeah, crazy move. Is JD too risky? JD, I mean, a lot of Chinese equities are quite risky. I mean, you could see that in Pinduoduo today. But yeah, this one's kind of consolidating here. Maybe it's getting tight. The 200 days starting to, and you can see once again they're converging all the averages. So you'd want to see it provide its strength. But some of these names they're starting to kind of like peep back up, like Baba, right? It was starting to look good. It came back in today slightly on probably the Pinduoduo stuff, the earnings or whatever it was. Yeah, that's crazy, man. That's a huge move. So yeah, it's only risky if you size up too big, right? If you want JD, if you want to buy that, there's one way you can make it less risky, smaller of a position size. So if you bought right here and it goes down more, but it's a small position size, okay, whatever. You can get out or try waiting to see if it consolidates or comes back up and consolidates, and you could add back more in when it's actually going in your favor. One thing that's important that most people do not do is add when it's working out for you, and get out or don't add when it's going against you. So that means if it's going in your favor and you're adding to the positions, your P&L curve is going to move faster to the upside because you're trading with your portfolio, right? But if your losers you're not adding to your losers, that means your small positions, they're going to just go down and it's going to be smaller of a decline, right? But most people, they'll be like, I'm going to add to my loser, and then it keeps going down. Oh, crud. And then I add more, and then it's like you get these steep declines, and then you get small moves up, and then you take profits, and then all of a sudden you try to add more, and then you get this strong hit to the downside. It's the exact opposite of what actually professional managers do. Not all of them, but if you're trying to do this longer term for swing trading, or trend trading, I should say, trend trading, you should be trading and adding while things are working and resetting back up and cutting your losers, not adding to losers. Hope that helps. Bros looks promising. Let's take a look at Bros. Tom Hugard. Yeah, Tom Hugard. I haven't seen, he trades he's a high risk trader. I haven't got to see him live, but I do like Tom Hugard's book, Best Loser Wins, I believe it's called. And I mean, that's the title says it all. Like, you got to be a good loser. You got to be very good at losing. That's a great book. I've listened to that thing 3 or 4 times. Bros can be setting up. Yeah, maybe. I don't know if it's a bullish setup that you're looking for right now, but you are seeing some higher lows, but it is also potentially flat, like flagging-ish kind of right here after a bearish earnings move. So coming back down too. Like if I was looking at this inverted, I'd be looking for a breakout to the upside. But it is still, it's rising 200 day. It's the 50 and this is sloping down, but and it hasn't gone anywhere for the year. It's just all over the place. You guys seen that book? Yeah. Oh, okay. So people know about it. That's cool. Yeah, it's a great book. All right, to the moon. Here we go. To the moon. All righty. We're right there at that daily expected move. Let's take a look back in at market net flow. It's still telling us, watch out. It's not giving us any good insight here. It's been bearish all day. We got some reprieve over here because we started losing convergence. That's totally fine. When you lose convergence or momentum, all it's telling us is that price of SPY is not moving with market net flow. And now we're back to convergence and divergence, right? All right. We went over a lot of names. I'm going to quickly go through my list. I'm not going to go through all of them out loud, but I want to just do a quick scan of my stuff, and I want to see if there's anything that stands out. I mean, there's a lot of names, man. My watch list came up to like 400 names, and the tight list was quite large too. So there's a lot of names setting up. Just in the markets overall, right? Just a lot of setups, man. A lot of them look similar, so a lot of them could be in the same industry and so forth too. Man, that was one I was interested too. See, sometimes it's just too hard. I got to set the alerts then. Sprouts, man, that was the one that I was interested in because it was consolidating nicely and it's breaking through this area today. So to retest this high on Sprouts, SFM, looks pretty nice. But bullish context, it was getting tight. That was on the tight list and that started moving through today. Back through 100. Maybe you still get a couple bucks. It is what it is. I missed that. It's up 3% plus today. I'm gonna let it go. CDNA, this one's flagging out here. Already a very strong move, so maybe this could be like a kind of a higher type flag as we've went over 100%. This one built a very strong base, tight base. Boom, we saw it move. Now it's consolidating here. Maybe if we break the high, I'm not interested really in chasing it right now, to be quite honest though. I'm gonna move past that one. H&R Block did have earnings, so this could be on the move. And now it's just consolidating here. Maybe if it starts breaking through this, you have your risk over here for a potential pop right back up to this swing high or maybe a little bit higher. There's nothing speaking to me right now, which means I just have to. I mean, there's some good names, good setups, but I'm just not like, I just don't have a good feel right now.
Making aware, not seen any comments from Feds Daily yet, but she is due imminently on business television.
APD is starting to make a move. That's decent, but it's also not the greatest trend. But we did have a nice earnings pass, and it got really tight here. And we're starting to break through that today, so maybe that's a insight that we might start pressing back up here. That'd be a pretty decent move back up. I'm still not really interested in executing into any of this right now, though. Musa can be one to watch. Murphy. I've been watching this one just kind of consolidate up here at highs. It's getting pretty tight, so we'll see if that wants to break out. Not ready to execute into that either. I don't think I'm going to be adding anything to the portfolio today, to be quite honest. I think I might just have to wait for NVIDIA to pass and just get over it. I have stuff that is on. I told you some of the names earlier. I have 1, 2, 3, 4, 5, 6, 7 names that are on right now. I have one that's down on the day, and that's Cube. That's down 0.3. So yeah, I'm doing pretty decent today. What's the SPY at? That 560, by the way, turned into a magnet. So that means price can come right back up to 560. See how it turned into a big red bar? This is where price can kind of attract to it. So you look at this now. It was a green bar, which repels price, and that just flipped over. So coming back to 560 could be there, but market net flow is still like that. Market net flow still looks pretty cruddy. But yeah, pulling into 560 could be a potential right there if you're a faster trader. I think I'm going to cut it off now. I think that's all for really the day. We went through a lot of names. I think we got to wait for that NVIDIA to pass and go from there. Thanks for everybody for tuning in. You see Mara is dipping, yeah. But yeah, I'm going to call it quits right there. If you are trading, just be aware that market net flow is still bearish. We did see that magnet to 560. Here it goes. We're 20 cents from it. It'll probably click it here in a moment. Those are just those kind of trades that if I wasn't live, I'd be able to be able to execute a little bit quicker. You're welcome, FT. See you, Tony. See you, everybody, for being here. Hope some of the analysis helped out on some of the names. Shia. Everybody there on X, appreciate you showing up.
Daily has just started speaking.
We got a Fed speaker too, by the way. So watch out for that. Get Fed talk. Yay. For sure, Nolan. See you, Chip. See you, John. Credit Union. See you, Jason. Everybody that joined over YouTube, Twitch. Appreciate Bensky.